Hello, my name is Jessica, and today we're going to look at what is a subcontractor. The disclaimer is that the information provided in this video is for educational and informational purposes only. While I am a licensed tax professional, the content of this video should not be considered specific tax, legal, or financial advice. Each individual's tax situation is unique, and you should consult with a qualified professional for advice tailored to your particular circumstances. The creator of this video cannot be held liable for any actions taken based on the information presented in this video. So, what is a subcontractor? It's tax time. Guess what has just arrived? It's your W-2. As a traditional employee, you are probably used to getting a W-2 in the mail when it's time to file your taxes. As a subcontractor, you are going to receive a 1099 NEC, or non-employee compensation. Now, most 1099 employees don't operate a business in the traditional sense, but you will be required to file a business return. People are often paid on a 1099 for gig work, such as Uber or Lyft. But any type of service that you provide for a company for which you are not compensated on a W-2 will be compensated on a 1099 form. And this form has to be filed with your taxes. So today we're going to take a look at what that means for you and what are the most common expenses that you can claim as a gig worker. So we're going to look at employee and subcontractor. Now, as an employee on a W-2, you are used to having your pay hit your bank account, and federal and state taxes have already been withheld, and FICA taxes, which are Social Security and Medicare taxes. All of those have already been withheld, and the money that you receive in your bank account is all yours. Now, as a subcontractor, you receive the entire amount of compensation, and you are responsible for paying your federal, state, and FICA taxes. So, as an employee, you pay 7.5% of your income, and your employer pays 7.5% of your income into FICA taxes. As a subcontractor, no taxes are withheld, and when you file your taxes, you will pay 15% of your income into FICA, or self-employment tax. The federal and state taxes are withheld from a W-2, but you pay your federal and state taxes on your income tax return as a subcontractor. So let's take a look at this 1099 that you will receive in the mail. In this section here, you can see that your name and address should be listed here. And the only other box with any information in it should be box 1, non-employee compensation. Because remember, no state or taxes have been withheld to go into any of these other boxes. So now that you have your 1099, what do you do with it? You will file your 1099 on Form Schedule C. This is the form. It is profit or loss from a business. And while you don't operate a business in the traditional sense, you still must use this form to file your 1099. I know it looks like a lot, but we're going to go through each portion just so that you understand the information that you will need when you file your taxes. A lot of tax software makes this very easy, and you don't have to do this whole form. They just ask you simple questions about your business activity. So, starting from the beginning, the name of the proprietor and Social Security number should be your name and Social Security number. The principal profession and the code from the instructions can be found on the IRS website. There is a long list of codes that has different types of activities. You would choose one that is the most closely related to your business. Again, tax software makes this very easy, and they will likely help you find that code. The business name and business address will be your name and address. Unless you want to name your business something, you can do that in this box. And if you do have an address for an office, you can put that here as well. The EIN number, or employee ID number, is a number you're probably not going to have. To get that number, you have to file a form with the IRS to attain that number, and you would generally only do that if you are going to have employees working under you that you would provide a W-2 for. So they would need, then you would need that EIN number. So just leave it blank. You probably don't have one. Under accounting method, cash. Did you materially participate in the operation of this business in 2024? Yes, you did the work. You participated to earn the 1099 income. Did you make any payments in 2024 that require you to file Form 1099? So did you hire anyone and pay them for this work that you were compensated for, that you would then need to turn around and give them a 1099? The answer is probably no. So put no. The next section is income. So we're going to take a look at that. On line 1, you're going to put your gross receipt or sales, and this is where those 1099s are going to be put. If you have one, you will just carry that number from box 1 straight to this line. Otherwise, you will add the 1099s together. So if you did Uber and Lyft, depending on which one had more traffic at the time, you may receive two 1099s. You would add those together and put them on this line. You will carry that number straight down to 5 of gross profit because you did not have any inventory that we need to account for here. And then it will go to line 7, gross income. Income portion is now complete. The next section is expenses. So the most common expenses claimed for gig work are line number 9, car and truck expenses, and that would be miles driven times 56 cents a mile, which is the current rate for mileage. It is subject to change, so definitely want to check that. The next is tax prep. You can actually claim the cost of preparing your taxes, not on the first year you file your business, because you must claim it in the year that it happens. So in the second year, you can claim the tax prep expense for the first year that you filed. And the next is cell phone, the percentage of business use. And generally, I would say unless you have a second line that is only for business activity, you are going to claim 50% or less of your current phone bill, because there's no way that you could argue to the IRS that you don't spend any time on your phone doing non-business related expenses if it is your only phone. So you want to do 50% or less. So for mileage, you need to keep a record of any mileage that you are going to claim, and it must be written, and you are going to set up a simple spreadsheet like this one, or you will get a mileage app that will help you keep track of your mileage. So to set up the spreadsheet, you are just going to need a few pieces of information. What vehicle are you using? I have a 2022 Toyota Camry. When did I place it in service? So what was the first day I started using it for my business? In this case, it's March 15th of 2024. what was the beginning mileage on that date, and then what was the ending mileage at the end of the year. That's going to help you with some calculations a little bit later. Then you need a record of each trip that you took and the purpose that it was for. So on the 15th of March, I used my Camry to travel 50 miles to pick up an order and deliver it to a client. And you would go on in this manner for each trip, and the trips need to be ordinary and necessary for your business. So you must be able to stand your ground if the IRS were to audit you as to what these trips were for and why we are claiming mileage for them. So now that we have our mileage log from the previous year, we're going to put it on part 4, information for your vehicle. So it says, when did you place your vehicle in service for business purposes? It's a good thing that we wrote that down on our mileage log so that it's right here, the 15th of March of 2024. Of the total number of miles you drove your vehicle during 2024, enter the number of miles you used your vehicle for business, commuting, and other. So to get these numbers, you are going to subtract out the number of business miles from the total mileage that we tracked right here at the beginning of when we started using it and at the end of the year. So in this case, we got 350. So was your vehicle available for personal use during off-duty hours? Yes or no? Do you or a spouse have another vehicle available for personal use? Yes or no? Do you have evidence to support your deduction? Yes, I do. Is the evidence written? Yes, it is, because I made a handy dandy mileage log to write it down on. So back to our expense section, you can see under line 9 that we have claimed $196 of car and truck expenses, and that we arrived at by 350 miles times 56 cents a mile. And the only other expense we claimed was the cell phone expense at $240. So the total expenses for the year were $436. So you would subtract out the total expenses from the gross income and get your tentative profit on line 29. So let's look at that cell phone expense. So under part 5, other expenses, any expense that you claim on that line 27, you need to detail in this box. And what I wrote here was cell phone, $40 a month, divided by the percent of business use, which was 50% in this case. So $240 is what we claimed there. And we put it right there under line 27. So we now have our total expenses. We have the total gross income on line 7 above. So we would again subtract those out and get your tentative profit or loss if it cost you more to do the business than you made. So we'll put that on line 29. Then we're going to look at line 31, net profit or loss. So if you had a profit, you will enter that on Schedule 1 of your 1040, line 3, and on Schedule SE, line 2. So let's look at what that means. So the Schedule 1 is a form that lists all kinds of income that is not earned from wages on a W-2, dividends or Social Security or anything like that. There are all these other categories, and the one you are going to use is line 3, business income or loss, and you must attach the Schedule C, which details how you arrived at this number. So that will carry over to your 1040, which looks like this. So right here on line 8, additional income from Schedule 1, your gross profit or loss will go on this line. So that's how it carries to your main tax return. But remember, under line 31, it also said to carry it to Schedule SE, line 2. Let's take a look at what that is. So Schedule SE, the self-employment tax form. You're going to carry that business profit or loss to this line, line 2. Now on the bottom of this sheet are all the calculations that are made that will determine how much you will be paying in self-employment tax. So I'm not going to go through all that here. I just want to highlight a couple things for you. So that SE number that you got is going to go on line 23, other taxes. And that is going to be your FICA tax, which is around 15%. Now, this tax is put on after your standard deduction. And what that means is, even if you did not make enough income in the year to owe federal or state taxes, you may still owe self-employment taxes. Why? Because we're paying our FICA tax, our Social Security and Medicare income taxes that every worker in the United States pays. The only way to lower this number is to claim your expenses. So tracking your expenses throughout the year will help you lower your overall tax liability or the amount of tax that you will pay. So another deduction that you want to keep your eye out for is the qualified business income deduction, or QBID. It is equal to 20% of your business income. So if your net income is above 0 on your Schedule C, you can claim this deduction. Only a few categories of work do not qualify, and gig work most likely does. So keep an eye out for it on your tax software, the QBID, or ask your tax professional if you qualify. It could save you some extra dollars at the tax table. My name is Jessica, and I created Ellen Consulting to promote financial literacy through education like this video. I also wrote a book called Understanding Your Finances, A Beginner's Guide to Financial Literacy. It is available on Amazon, and you can check the link below in the video description if you'd like more information on that. Thank you for watching.